Big Bear. There we go. I think I'm live now. Okay. There we go. Now I'm live. Okay, cool. All right, folks. Who's on here? We have Big Bear, Trisha. Hello, Trisha. Trader Isaac, Casper. Casper. I know you. You want to short the DAX and the AEX? All right. Chinner, hello. Yes, smash the like button. Larry, what's my total mileage? It's a little over 1,000 miles in the past couple of days, and it's going a lot higher. Seymour, hello. It's a new gentleman's name. All right. Let's do this. Okay, so the topic of tonight's live stream is going to be a response to Peter Schiff, who I'm a huge fan of. This is not going to be a knock of Peter, but in terms of his analysis and opinion on Bitcoin, his opinion could be what it is. Maybe it's junk for all I know. I'm not that smart. I have to say, I'm not that smart. I don't know anything about the stuff. I don't understand it. I fear government getting involved, but I'm going to speak to the technicals that I can do. And Peter made a podcast a couple of days ago where he said that he believed that Bitcoin was putting in a double top. We're going to talk about that. We'll answer that question. We'll respond respectfully to Peter because I'm not in agreement, and I'll share with you why. So if you're wondering what are these surroundings, why are you seeing my face straight on? I just got into Tampa. Been doing a lot of driving. I spent the past couple of nights over in Charleston, a great, great town. The best oysters. I'm from Long Island, and we love our oysters there. But I'll tell you, the St. Helena oysters in Charleston, absolutely outstanding. So the Francis Marion Hotel is where I stayed. Very nice place. I suggest it. And if you get an opportunity, go to Charleston. Just a great place to chill and relax. Let's go to the opening price action of the futures because this is going to be a volatile week. Why? Fed week. I want to begin with the U.S. dollar. Kathy, hello. Eric, hello. WG Shocker, Costco, Tesla. All right, we'll take a look at it. All right, so let's go with the U.S. dollar first off because that really sets the tone for me because we do like the commodity space and the dollar is taking a wee bit of a hit. And this is a 4-hour chart. These will all be 4-hour charts on the futures. Now, what happened here, which makes this particularly bearish, is that we broke out here, this beautiful, beautiful candlestick. We closed above this yellow line here, which was resistance. It was supposed to act as support. It's failing to do so. So, major problem right off the bat with the dollar. The dollar is struggling by a hair to stop making new, not just daily lows, weekly lows, monthly lows, but yearly lows now. The dollar is at the precipice of a plunge. So this is a breakout point failure if, in fact, we fail to hold above, let's call it 90.91 and then 90.76. That'll be two support levels, history. So very bearish price action at the open here for the U.S. dollar. Let's take a look at how commodities are responding to this break. Let's go to light sweet crude. Light sweet crude is doing what it's supposed to. It's rallying. Moving up higher, over a third of a percentage point. There we go. And we have possibly a breakout. This 4-hour candlestick won't close for another over nearly 4 hours. So it doesn't matter where it trades intra-period. What matters is where it closes. Moving on to, of course, gold. Not behaving well. I swear, more often than not lately, gold is trading with, the US dollar. It's trading alongside of it. I don't get it. I don't understand it. I know it won't last. We've seen correlations before, but usually it's when they trade up. And that's because there's usually a risk off period where fear sets into the markets, and you see money rotate over and into gold and the US dollar. We don't have that situation right now. Unless it's just simply the fact there's just so much complacency that people just don't want anything to do with gold and especially the US dollar because it's a risk on time frame, and I'm willing to bet that that's the problem. And I think things are probably going to get a little bit worse here in the short term. Why do I say that? Look no further than this setup here. This is, again, there's a 4-hour time frame, head and shoulders setup, left shoulder, head, right shoulder forming. Here's your neckline, or you could do one of these numbers. This is probably better. You can see we had a bit of a flash crash on Friday, but it recovered. So it must hold this support level, or we could go considerably lower. Now, it's not a head and shoulders setup until, of course, it has broken these support lines. I would not go shorting gold. I wouldn't go buying it, but I wouldn't go shorting it either. Other metals prices, palladium has been putting in lower highs and lower lows. No trade to be had here. Gasoline continues to trend up higher. And I'm looking at these because of what? Because of inflation. I'm going to go to the inflation data in a moment from last week, and it was not pretty. And that's what they reported. We know that those are not real numbers. Silver, very similar setup as to what we're seeing on gold, where we have a head and shoulders setup, left shoulder, head, right shoulder. Here's the neckline, or you could do one of these numbers. All right, we're long of gold. I see no reason to go selling it. We're long of silver. I see no reason to go buying it, nor do I see a reason to go selling it. So we will hold our position and wait for the trade to come to us. Amerimigo, hello. Franklin, no worries, my friend. I'm using my my iPad as my backup monitor. Chibuzo Amika, love the name. Corey, I got your request. Oh, Corey, one of your symbols, DPSR. I couldn't pull it up. Can you confirm that that's the accurate symbol, please? Seymour, hello. Okay, let's move on. So silver, same deal here. Trading with gold, it happens. A little bit of risk to be had here. All right, so that's DPST twice I have there. Okay, I just want to make sure. Let's take a look at other commodity prices. Franklin was asking me the other day about the DBA. I think Franklin got long of it, and I like the setup. We went over this on Saturday. The DBA is looking very good. I see it as an opportunity to buy. We're having higher lows. And I'm not talking about the DBA on a daily time frame. I'm talking about it on a weekly time frame, looking very good. Corn, we're opening down about a 0.5 percentage point. We're locked in a trading range here. We attempted a breakout. This is a sloppy resistance level, but it gets my drift. So no reason to go buying right here, right now. But corn, you know, this is a 4-hour chart. So in my mind, I always keep in the back of my mind, and I should share it with you from time to time, is that my mind is set on the weekly chart. What are we doing on a higher level time frame? And on a higher level time frame, we broke out the week of the 23rd, failed to hold support, and we had a breakout point failure. Now, I will caution this, is that many times, this is last week, this is not the new opening candle. So we did retrace down to the lower band of support, but when a breakout point failure, which is what this is, or AKA a bull trap, many times most times you're going to get a retest of the prior support level. Many times you'll break that support level. So it's very good news that we held the support level last week. We did not put in a new weekly low. So that just tells you there's a lot of strength behind ag. Let's take a quick peek at wheat. Whoa, monster. For anybody telling you there's no bull market in ag, show them this chart. I mean, a monster. Bullish reversal bar, an outside reversal bar. Call it cupcakes. I don't care. This is a monster. This is going up higher. Wheat, outstanding. Tetrium has a fund. Symbol, I believe, is wheat. So you could buy, you don't need to buy the futures. You can buy an ETF or an ETN and get long of wheat. As a matter of fact, we'll take a look at that chart. I want to do that right now while I'm thinking about it, or I shall forget. Yeah, this is it. All right, I spelled it wrong. It's WEAT. Leave out the H. This is a monster. Look at this rally back. And when you take a look at it from a monthly time frame, what's not to like here? Beautiful higher lows. So far in the month, yes, it's early in the month, midway now, actually. We have a bullish key reversal bar, very sexy stuff. Watch for a breakout above 6.16. We get that. We're going a lot higher, much, much higher. I'm checking my other monitor here. How does Bitcoin have any relation to DPST? No relationship that I know of. DPST, yes, is the leveraged ETF. Yes, be very, very wary. DPST is the leveraged ETF. Not for the faint of heart. Okay, let's get back to the futures. So, looking at soybeans, same deal here. This is a new bull market. It's in the early stages of a new bull market for agriculture. Absolutely beautiful. Let's go to a 4-hour chart. We're opening up the week about a 1/4 percentage point. I mean, once we start breaking out and above 1176, I mean, clear blue skies above. And look at this W formation here. Very nice. Higher lows forming. Very good stuff. Moving on to, let's get to the equity market. I've been kind of putting it off because I figured that this is exactly what they were going to do. And they're gapping the small caps up higher. And this is a breakout, a 4-hour breakout. Not insignificant. The question is, do we close above this resistance level? Given the Federal Reserve is going to be meeting this week, and what do you think the chances are of them even talking about raising rates, entertaining Maybe you get a little tease, a change of words in their statement, but there's going to be no. I think there's a negative chance of them raising rates. So Russell 2000, or even talk of raising rates. Russell 2000 moving up higher here. Nice breakout. S&P 500, they're gapping it up as well. Question is, do we open up like this tomorrow, up over a half percentage point? Not much volume here. Where's my NASDAQ? NASDAQ 100. Up spot 4.1%. Nice W formation. We were stopped right at the pivot point earlier today. Actually just shy of it. Moving on to, I haven't taken a look at nat gas. This is due for a rally. And it's up. 2.70%. Looking good. I don't see a trade yet. Maybe on a higher level view, a daily, weekly chart, perhaps. We'll take a look at it. All right, so let's take a look at the economic data that we have coming out this coming week. But first, actually, I want to go to where's my CPI? Here we go. The CPI, the Consumer Price Index, they expected a rise of spot 1%. The actual came in twice that. And normally, the Federal Reserve will always say, you know what, we're going to only take a look at core CPI. We're going to back out food and energy because food and energy are too volatile. And I always snicker at that. And unfortunately for the Federal Reserve, core CPI came in double as well. So, and this is what they admit. And if you're looking at the CPI the same way as you did back when Jimmy Carter was president, it's been changed. It's not the same CPI. It's not calculated the same. So this is what they're admitting. Consumer sentiment spiked up, was good on Friday. But people are paying off credit cards, not doing much buying. All right, so this coming week, we have Empire State Manufacturing Index, industrial production, a lot of economic data. Retail sales, huge. Wednesday, we have the Fed head announcement that the press conference is torture. It's just absolute torture, listening to him. Initial jobless claims, as always, that's a weekly number. We also have building permits. Housing has been strong. The banks have been strong. Rocket Mortgage, not so much. And I own it. So we have housing starts coming out this week. Building permits, that's a forward-looking indicator. The one caveat you need to know about building permits is that simply because they get approved for a permit doesn't mean they have to break ground. So yes, it's a forward-looking indicator. However, just know that they don't have to break ground. So a lot of economic data coming out this week, and it can move the market, especially the Federal Reserve numbers or the Reserve meeting. Leading economic indicators, current account deficit. Really, who cares anymore, current account deficit? It's so crazy. All right, let's take a look at some chart requests. I lost my monitor here. There we go. Christina. Hello. I guess my UVXY stocks will be taking a hit. Let's take a look at it. Okay. I don't think it's bad. So I'm torn here. All right. You have your tech. I'm so used to the camera being off over here. I'm torn between seasonality, because for those not familiar, the UVXY is a short ETF, putting you long of the VIX. So basically, you're shorting the S&P 500. To narrow it down to its most basic purposes, you're shorting the S&P 500 with a ton of volatility backed up behind you. So I don't dislike this chart. I dislike seasonality and the time frame in which that we're putting on this trade, because we're moving into a seasonally favorable period of time. I keep saying this because I don't want people shorting this market aggressively. January, different story. Right here, right now, remember what season we're in. Yes, it's Christmas season, Hanukkah season, New Year's season, but it's another season. It's bonus season. And all these guys on Wall Street this December, they want to lock in their gains. They want to show a strong December, because that's how compensation dictates behavior. Compensation dictates behavior. So they're going to make sure this market closes up higher and strong on the year, so that way they get compensated. After January 1, who knows what happens. But we need to keep that in mind. So UVXY has been beaten to death. I think the better logic here would have probably have been, this is a monthly chart, would have probably have been to have waited for a breakout, because this is a real pretty setup on a monthly time frame. And it broke. Right? So we were trading within this downtrend channel after breaking out earlier in the year. This is the COVID rally on the VIX. Here's the pullback, the recovery of the Tues in particular, then the S&P 500, now the Russell 2000. But we broke the support level. So I would rather have waited for the market to have sent you a signal that all is well here and bought the breakout. Now, if you're long of it, I don't think it's a bad trade per se, because you're buying it at the lower band of support. We got back up in the month of December to recapture. Do we hold it? I don't know. We'll see. But right here, right now, it's not looking bad. And I happen to really like this cup with handle formation on the UVXY. It looks like we're going to break out here on a monthly time frame. It may be this month, but probably not. Probably next month. So if you can endure then you should do so. But if you have to stop out, you got to take your losses sometimes. Especially if you're on margin, because I think you need to be 90% cash with this position. A very good week last week. A very nice bullish reversal week. I like it. I have to be honest with you. I just hate the seasonality factor. Great volume. You aren't alone here with executing the trade. Christina, thanks for explaining the behind the scenes on UVXY. You have half of that's a big, yeah, that's a big position. You're making you shouldn't be Casper on here. He's a diehard short. I'm with Casper on my coaching sessions, and diehard short, stubborn like me. So It's a good time talking with those sessions, but he reminds me of me way back when. So be careful with adding more to this trade right now. And if you have to lighten up a bit, so be it. I don't think it's a bad setup. I mean, on a monthly time frame, weekly time frame, daily time frame, it's looking good. We're climbing a wall here. We're beginning to, excuse me, let me backtrack. We have already begun to break out. And on Friday, we flashed actually, this is a 2-hour chart. This is mislabeled here. I was wondering why it looked different from the daily chart before. Okay, now it makes sense. Closed very strong on Friday. Let's go to the daily chart. Stokes look very, very good. Nice gap up high. Here's the breakout. I knew it looked different, but similar to the 2-hour chart. Really good volume. I mean, these are institutions. This is not mom and pop buying 100 shares. These are institutional buyers that are validating the breakout here. This is not amateur money. So I like it. If it's half of your portfolio, that's a lot. I'm not sure whether or not they have calls here. Let's validate that. Maybe you want to sell some calls, hedge a bit. Yes, they are optionable. That's another, pardon the pun, option for you is to sell some covered calls. A strike price that looks very, very good are the 15 strikes, because keep in mind that strike, and I would stay very short term, no more than 30 days, ideally weeklies if they have them. Your 1469 to 1482 has been very stiff resistance going back to February, most recently in November. So the 15 strike price, you're just beyond resistance. So the probability of having the shares taken away from you is improbable. So that way you can generate some income, put on a hedge, and if they pull back, so what? You're getting paid to wait. So, Casper, I just caught your note. That sounds rude when... Was I rude, Corey? I'm sorry if I was. So think about selling covered calls on the UVXY. It's just a thought. Okay, let's move on. We have a bunch of stocks to go over here. Corey, let's go to your DPST. Let's bring up our good friends over at TrendSpider. I already have it up here. All right. Again, folks, as I mentioned earlier, this is a leveraged ETF, putting you long of the regional banks, not for the faint of heart. Before I speak, I want to check out bonds because it's so important. Look at Nat Gas futures ripping here, over 3% up now. All right, so bonds are pulling back. That means that yields are moving up. So why do I want to know this information before analyzing the chart? What does one have to do with the other? It's called NIM, net interest margins. It's the margins on bank loans. And remember, the regional banks in particular rely upon their earnings derived from not trading, because they don't do trading. They derive their earnings from loan origination, loan servicing. So it's important that yields are moving up higher along with the stock market. And the DPST, now knowing in the back of my mind that yields are moving higher at current. That could change by tomorrow morning. The probability of a breakout here on the DPST weekly time frame is pretty good. 115.42 being resistance. We did get a bit overbought relative to the third standard deviation Bollinger Band the week of the 9th. Rather than pull back, the shares just simply traded sideways, alleviating that froth. Now it appears as though they're going up. Daily chart. Nice orderly pullback here. So this this chart here shows you two support levels rising. One is the 20-period moving average in green. The other one in yellow is an anchored VWAP. So this is good rising support. Watch for a breakout, ideally above. Let's go back to the weekly chart for a moment. 115.42. That's what I would do here. I mean, if you wanted to put a trade on, I would have zero problem with it. Just stay small, test the market. Definitely don't go all in. 105.17. You know what? I'm going to set up an alert here. All right, so if we happen to get hit, meaning that our support level gets hit, I'd be interested in getting long of the DPST. But again, not overly aggressive, right? Because we just want to set a stop right below, let's say, $100 a share. We want to get more aggressive on a rally up and through 115.50, thereabouts. So DPST looking very good. Gush, this is an oil, I believe a leveraged ETF. Just keep an eye on the dollar. If the dollar continues to weaken, as it appears it is, oil is probably going to move up higher. These are all inflation hedges. This hasn't moved much on a, let's bring up the logarithmic. Can't say that word. Just call it log. Okay. So, nice breakout here. Monthly breakout. Good stuff. Will we close there? Not quite sure. But thus far, looking good. Weekly chart. Very nice breakout. We broke out the week of the 30th of November. Last week we did a pullback and a retest, then flashed a continuation breakout. I like it. I think it's going up higher. Very nice. Daily chart. If you happen to get a pullback to 37.96, that would be a very good support level to buy at. Keep a little bit of sensitivity on. What's going on here? Oh, I see why. Okay, good. All right, we're good. Set it and forget it. So Gush, looking good. Inside day on Friday, maybe we'll get a pullback. But if we see the dollar really begin to pull back, I suspect that in all probability, we're just going to go moving up. AMD is the next symbol. I want to pull back to a monthly time frame to get a feel for what's going on here. A lot's been happening with AMD. Let's take the logarithmic log off. Okay. So on a monthly time frame, we want to do this to identify where we've been, to help us identify where we may be going. So we take a look at the monthly chart. And at current, we're at the pinnacle of a triangle formation. And we've attempted to break out. We failed. So we're at current at the lower band of that triangle formation. Do we break? Not quite sure. But I drew this a while ago. This head and shoulders setup. Left shoulder, head, right shoulder. It's actually holding in there, but I'm not ruling out that we could break to new lower lows. So beware. We were on pace to break out that since been next weekly chart. Yeah, so you can see here on the weekly chart, we broke down below support last week. I couldn't buy these shares until they recaptured support at, let's call it $95 per share. I want to know on a bare minimum, a weekly time frame, that we're back above support. I think there's too much risk here to put on a new trade, given in light of how we closed last week out. Very bearish week. Daily chart. Good Friday. Good Thursday. But still, this is a very bearish day on the 9th. So many times you see this where we break support and then you spend the next couple of periods, because you see this on 2-hour charts, 4-hour charts, whatever, monthly charts, weekly charts, where we break down below support level. Then the next couple of candlesticks, traders are in denial. They don't realize what just happened, or they're watching it and they just believe that, I have FOMO here and I don't want to miss out on a new rally here. This is what I call a denial run. And what they're going to try to do is they're going to try to take it out and try to recapture the support level. Maybe they do it. Most likely they're not. That's what generally happens. So this is the inverse of a breakout, then a pullback and a retest to validate, right? This is the same thing right here, right now, but the inverse. Here's the breakdown. Now is the rally to try to retest. And does it fail, or do we get a continuation rollover? I think it rolls over. And that's a pretty bold statement since AMD has been in fuego. So I don't say that lightly, but this chart is implying, to me anyway, that there's a lot of risk here, not enough reward. Again, if we close above $95 a share, I'm good. I'm an opportunist. So if we see strength, I'll change my tune immediately. But right now, too much risk, not enough reward. Okay, this is for Casper. Hey, Pat. What? I'm teasing with the Bitcoin analysis. I'm being called to the carpet here. I'm gonna do Bitcoin. Guaranteed. Yeah, Pat. Futures are up nice. Okay. AEX. Okay, so Casper's a great guy, and he lives over in the Netherlands, and he likes to short. We'll go to the Amsterdam exchange first. As a matter of fact, I think I have this saved. Yep. It's a very strong market. So the first thing that jumps out at me is that we are at resistance. But these Stokes are still rising. RSI is broken out. This is pretty weak, ultimate oscillator, but I don't really trade off of the ultimate oscillator. Weekly chart. Reversal week last week. I like the short idea more now than I did a few weeks ago. Check out volume. I don't have any volume on here. There's no volume. MACD histogram flattened out. last week. So momentum is beginning to come in a bit on the AEX. Now, I believe there's been an extension of the Brexit talks for another week or so. What influence that might have, I'm not sure. You'll know better than me. Daily time frame. So, what we did. Are you getting massive lockdowns, Casper? Okay. Hello, Kay. Hey, Bob. Think we can get a good deal on Facebook and Google next week? Maybe. We'll take a look. All right. So, let's update this. Here's my opinion. I know you, Casper. You're not going to listen to me. You're going to do what you want to do. I get it. The only thing I would really suggest here is that you... Let's get rid of that. Use a stop. If we make new all-time highs, I would stop out. We did. I'm going to be very. You could argue that we closed down below support. I'm going to say we closed at support. If we put on a new, me personally, I wouldn't short right now. But I know you like to short, so I would wait for a new weekly low here. If you get that, then I would look to lean into the short side. And you may just get that. Because take a look at your stochastics. They're rolling over now. RSI is rolling over as well. We don't have lower lows yet. And we also put in higher highs. Very strong market. So you really need to be careful with shorting this market. But if you're going to do it, I would wait for a new weekly low, buy the confirmation breakdown, or short the confirmation breakdown. Now to the DAX. This is the German stock exchange. We'll do the same thing, go to the monthly chart. So, if memory serves me, the German markets do not fare well when you have a strong euro. Let's validate that. Yeah. They can correlate. But you can see here, there's been a complete, it began in 2011, a complete inverse correlation between the DAX and the euro. So, with that in mind, because remember where the euro is going, it's going nowhere but up. 55% of the Dixie basket currency, that's the basket of currencies that trade against the US dollar, it's made up of euros. So the euro is the largest component, with the yen being the second. Would I short this though? I would have to do a deeper dive. We're very close to all-time highs. I can't save it because I just ran out of chart space. I'm going to try anyway. Here, we'll save it here. Okay. Stokes is still rising. It's got momentum. But here's, well, you know what? This is not a divergence. RSI is trending, putting in lower highs and lower lows. That's just because we've been consolidating for so long. So that's not truly a divergence. Weekly chart. Bearish reversal week last week. Possible lower high. Now, keep in mind that the RSI broke out already. Last week we did a retest, and it held. This is an indicator, possibly sending you a warning flag, don't short. If you're going to do it, I would do it on a breakdown below psychological support at 13,000. I would not short it right here, right now. It's too much support down there, and it's psychologically significant. Daily chart, your Stokes are going to be trading down below the 50 mark. That's good stuff. That benefits shorts. But again, I want to see this share price trading down below 13,000. Or the index, not the share price. Trading down below 13,000. That's my take. Wait for 13,000 to get hit. Any rally to retest and try to recapture 13,000 with Stokes trading down below 50. Short the rally. That's what I would do. And if we manage to close above 13,000, you may want to think about stopping out. Those are my thoughts. We've already gone over DPST. That you can catch it on the replay. Let's do quickly Facebook. I'm not liking Facebook here too much. A lot of topping action. This is a monthly chart. Technically, we're trading down below support. We'll say we're trading at it to be conservative. I worry about people trying to short. I don't think this is a short yet. Weekly chart. So my take here is this, is that we may, in fact, have a lower high, a double top. It's not a double top, quote unquote double top, until you have a confirmation. What would be the confirmation? Confirmation would be a break to a new lower low. And that's down here. That's a good ways away. That's a $30 drop. And clearly we've broken support on a weekly time frame. RSI putting in lower highs, lower lows, daily chart. I suspect that they're going to try to rally it here. But ultimately, my guess is that they'll rally it for a while but then I think it breaks. I think it goes lower. I would not short right here, right now, though. Definitely not. Google, I wouldn't buy it either. We've already booked profits on Facebook. Sorry, the other Google. Is that the one you requested? Hi, Bob. Can you, Costco? Hi, Bob. Can you tell me what's going to happen in next week and Christmas rally? If history is any guide, and that's all we really have to go by, is that absent geopolitical risk or an event, the probability of the holiday season seeing a rally is very, very high. I went over the compensation dictates behavior reason. Another reason is that you as the holidays approach, most of the bigwigs at these brokerage firms, these big houses, they're going away. They're not going to be there. The decision makers are not going to be at work. They're going to be in Aspen. They're going to be over in Stad on their private jets. They're going to put the computers on autopilot, and they're going to keep the market in check with a bias to the upside. Of course, that assumes that there's no geopolitical risk. So to go shorting right here, right now, is to fight the market and history, which is very, very strong. I mean, this is one of they used to be saying, sell in May and go away. That's long gone. But the one constant that has never, ever changed, there have been exceptions, but the one constant that's never changed is the Santa Claus rally is very, very reliable. So why fight it? Unless, of course, the markets give you a reason to fight it. So, and it could be an event, South China Sea, Middle East, the presidency is still undecided, still fighting going on. So who knows? Who knows? We're not that smart, right? We don't have that much information. So rely upon seasonality first, and then when the news hits, hopefully you have a hedge on as we do, and you're ready to be a net short of the market. So yes, I have short positions on, but I also have longs to offset that. That also being said, I've been taking longs off the table slowly but surely and building a cash position and looking to eventually get net short. Now, there are people out there that are betting that, Bob, you're missing out on the fact that the Fed's going to keep printing money. They're going to come out with new stimulus. I don't think it's enough anymore. This market is a heroin addict. And I keep saying this constantly to drive home the point, is that it needs more and more stimulus to get less and less of the desired effect. And keep in mind, this market is already overvalued. It's already seen a nice rally. So what if they announce more QE, but nobody cares because it's not enough? That is the worst nightmare of the Federal Reserve, that and interest rates shooting up higher. So that's my take. I don't want to take up too much airtime here. What else do we have? All right. We did AEX. Tilray, Pat? Okay, let's go to the log view. So far, we have a bearish reversal bar on the month. New weekly lows last week. We just closed right off the lows of those lows. Pardon my redundancy. Here's your VWAP, volume weighted moving average, and it's at 6.76. It's a good ways away. I'm not loving it, Pat. I think that we really need to see a breakout on this one to get excited about it. They tried to break it out on Friday. No bueno. It's certainly not as short. We're close to a setup here. I mean, you could argue that this is a saucer with handle formation. I would buy into that. But the rule of thumb there is that you would need to buy the breakout. You could buy here, but you're going to want to use a stop loss right below 7.47. And I would just test that trade, add more on a breakout. I'm not seeing a compelling reason to get aggressive right here, right now, or to even open up a position. It's not a horrible chart. It's one that's just consolidating. Costco, what's my opinion on the stimulus bill? My opinion is this, and this is why I keep saying it's not enough, is if you think about it this way, and I've said this before, and I'll repeat it again, is that Nancy Pelosi could have had $2 trillion. Now she's going to have to settle for less than $1 trillion. Traders in the back of their mind, because they're junkies, have $2 trillion in the back of their mind. So if they get a number less than $1 trillion, to them in their heads, the Federal Reserve just raised rates. So I have a feeling that they're going to have a hissy fit. I don't know that, but that's my, some of this business is just based upon intuition and knowing people, knowing the mentality. And the mentality, because I get that feeling. I despise the fact that they're issuing all this corporate welfare. And not so much for the poor people that got laid off and didn't ask for it, helping them out. But what if it's not enough? And that's what I think is going to be the outcome here. It's simply not enough. And the way the Federal Reserve went crying to Congress about needing more help from them tells me the Federal Reserve is running out of bullets. Hello, Kay. Hello to you too. FAS Cure. I already went over the bank stocks using DPST. I'll go over Cure, and I want to get to Bitcoin because we're running out of time here. The biotechs have been ripping. Not that they necessarily correlate all the time with Cure. This is a leveraged ETF, folks, putting you along of healthcare. Not for the faint of heart. Now, where is our support and resistance? Automated trend lines. Automatically, I'm going to say, you can't buy this. Why? It's because we are at monthly resistance. So this is the value of having the automated trend lines. Believe me, there's a link below. I don't care if you're an experienced investor, an amateur investor, you need to have this tool. Right? If you're an experienced investor, the automated trend lines. How much time did I just save? It's my spell check for technical analysis. TrendSpider, 35% discount code below. Okay, so by virtue of the fact that we have resistance above, automatically I'm like this. I have to say, let's do a deeper dive here. Do we have a shorter term setup? Not so much. This is a weekly time frame. They tried to break it out last week, but it was rejected. That's not a bull trap. That's not a breakout point failure. It didn't close above the breakout point and then fail the following week. So that's okay. It doesn't negate it. Just remember, watch this. On a monthly chart, I'm going to overlay that monthly resistance right here. And there you have it. You want to buy right here? All right, so I wouldn't do it. Now, if they manage to pop it up higher and close it above 72.75 per share, that becomes interesting, because now I have some leeway between where I'm buying and where I have my resistance. Daily chart. It tested the rising VWAP and the 20-period moving average on Friday. Not a bad day. Yes, it was down, but all down days are not alike. It wasn't a horrible day. We rallied off the lows of the session. So I'm not seeing a compelling reason to get long here. In fact, I'm seeing a lot of concern about this resistance level above. However, they close it above 72.75. That's a sign of strength. And then I would be interested in opening up a position, because that gives me a little bit of room between where I'm testing the market and where there's resistance up here. Let's go to Bitcoin. All right, so I started off with this earlier, and I was listening to Peter Schiff in the car today. And I'm a huge fan of Peter Schiff, huge fan. And he was talking a bit about Bitcoin. And he has a hatred for Bitcoin. I don't hate it. I don't love it. I think it's a vehicle. And that vehicle is in fuego. And now it's getting institutional support. And he can't ignore it. Now, Peter made the statement that he believes that what we're seeing is a double top. I don't agree. I don't agree at all. Might we be in for a correction? Maybe. It's come a long way really, really fast. Corrections are healthy. You shake out the weak, you get institutional support that comes in. Now, we did break out on Friday. Watch for a retest. You're probably going to get that. I'm not loving these Stokes. They're just barely holding on by a thread, and we broke out an RSI. So would I go all in here? No, but do I think it's worthy of some speculative dollars to the long side? Absolutely. Why? What I think Peter was looking at was this. He was looking at because I heard what he said, because we put in a new all-time high. The prior high was 1987.62. And we put in a new high, but it wasn't a closing high. But we did put in a new high. And I'm sorry, I just got myself all screwed up. He believes that this is a double top. I do not. I think we're setting up for a continuation move up higher. Also, what is a catalyst for Bitcoin moving up higher? Inflation. We've gone over this chart many, many times. Overlaid here in dotted gray is the CPI, the Consumer Price Index. I went over this earlier for a purpose. Let's revisit it, though, for those that are just joining in. CPI last week came in twice as hot as what was expected. So if the CPI is rising and you have a huge correlation between CPI rising and Bitcoin, why wouldn't Bitcoin keep going up? Especially since they have institutional support by insurance companies, no less, last week. Think about it. Talk about speculative. So, do I think that Peter's right? No, I disagree. Normally, I agree with him on most things. I do not agree with him on the fact that Bitcoin is done going up higher. I think this is going up a lot higher, to be frank with you, because it's being viewed as a safe haven from inflation. This was a huge, huge rally. To expect this not to correct is crazy. It's silly talk. And we have had a pullback. And if you think about it, the fact that we rallied back so quickly off the lows of the pullback and we're holding these gains is pretty darn impressive. So I think that Bitcoin is going a lot higher. And I think that I have to respectfully disagree with Peter on this point. So that's my take on Bitcoin. GBTC, no, that's Grayscale Bitcoin. They're very expensive. They have a big management fee. They spend a lot on advertising. So I would just rather own the cryptocurrency myself. So that's my take on it. I don't want to have to pay that fee. With that, folks, did you hear the news about GLSI? I heard about it. I was asked to talk about it on, I think it was Thursday Night Stock Charts Live, maybe. GLSI. This chart was amazing. One of the best I've ever seen. Yeah, this is it. It goes from 5 to a high of $158 in one day. Man, I respect the guy who used like a 2 or 5% trailing stop loss order, because your profits are all the way up here in the mid ones, mid to low ones. God damn, that's gorgeous. Do I think it's going up higher? I doubt it. I think you're going to consolidate here. I just want to get my Bollinger Bands up. It could. It's come off its highs. This is a daily setup. I wouldn't rule it out. I don't want to be quoted as saying, nah, the guy's, he bashed it. I wouldn't be shocked to see a pullback, but I wouldn't be shocked either to see a continuation run higher here on hot money. I mean, it's just the environment that we're in. And with that, folks, Casper, I don't believe in the long-term success of Bitcoin. I believe in Google Coin. I never heard that one before. Or so. That's my concern about Bitcoin, honestly, is a government regulation. A competitor to the U.S. dollar. They don't want any competition for the U.S. dollar. So that's my worry. That's why I personally wouldn't buy it. But that's just me. I have owned it. I did quite well with it. But I sold it. With that, folks, I'm going to say everybody have a great night. Thanks for joining in. Please smash that like button, hit the subscribe button, and I'll talk to you throughout the week. Be well.